Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
US PPI. Now, this number reflects the change in selling prices received by the US domestic producers for their output. The month on month numbers showed some increase over the expected figures, but Powell had some things to say yesterday, post which we saw a bout of dollar weakness. Good morning, JK. How are you reading the recent inflation data and what's your thought on the current markets?
Good morning, Swaraj. This week has been, a week of inflation numbers from various regions. We had India inflation on Monday, then US PPI yesterday, US CPI today, and we also had the final reading on Eurozone inflation. I think UK inflation will also come on Monday, coming Monday as well. So it is a time to assess how the monetary policy is going to evolve in the coming days based on the inflation prospects. But back to the inflation number, PPI inflation, as you said, the prices received by the producers from the wholesalers has shown a big increase last month, and particularly the services side inflation has remained quite high, and that is worrying for the policymakers. Only relief was that the March reading was revised from an initially reported 0.2% gain to a decline of 0.1%, and hence the report did not evoke as much response from the market apart from a knee-jerk reaction immediately. And later we saw the markets steady themselves. Yields actually fell slightly, and then of course we had the dollar also somewhat a weaker session going forward. Now we also have have had many inflation expectations reading. Michigan consumer sentiment data showed inflation expectations rising 1 year forward. Similarly, we had other surveys that the Cleveland Fed and as well as the New York Fed, all inflations 1 year forward reading much higher than the previous expectations. Now, all eyes now turn to the CPI number from US that is due to be released today, and the CPI number is expected to somewhat moderate for both month on month as well as the year on year. The month on month rate to come at 0.4%, and the core inflation is expected to ease to 0.3%. But even if they come as per expectations, they are quite high as per what the Fed is been expressing. So the higher for longer theme will remain unless you see a sharper drop than what the market is anticipating. Yes, Powell's statement yesterday also was comforting to the market because he said the PPI number is mixed due to the revisions in the previous month's numbers. And also he said right now, once again, reiterating that the rate hikes are not on the radar as far as the Fed is concerned right now. So these were the comforting thoughts. Yes, CPI will be key. Of course, we'll also have the retail sales number today, which is expected to come at 0.4% versus 0.7% last month. A moderation definitely. User consumption is very, very important for the GDP of the economy because it forms more than 66% of the economy. So that's the focus today, how the inflation comes and what implication it has for the Fed rate. And not to leave behind, again, the Eurozone showed once more set of a strong number, rather the outlook data of Zeus survey on economic sentiment. It once again beat expectations, beat previous month's number by a large measure, adding to the raft of improving economic data from Eurozone. And we eagerly look forward to the GDP second estimate today. from the Eurozone, as well as the industrial production numbers. Actually, the recent gains in the euro has been driven by positive news from Europe than due to any negative news from US, and that's very positive for the single currency. So we look forward to the US Europe number in the day ahead, as well as in the days ahead, because that could be a game changer for Europe as well. Finally, on the rupee, one of the lowest ranges, 1.25 paise for the whole day yesterday. Yes, and I mean, no one is really concerned much, because it's completely dominated by the PSU banks on both sides. Of course, the underlying demand is high. FI flows have been closing in on 3 billion for this month, ahead of the election outcome. Yeah, I think this narrow ranges for rupee should continue until end of this month. But just an observation that near-term implied option premium for 1 and 2 months have been still rising, and that shows that importers have been taking hedges in view of the big event that is ahead. Thank you.
Thank you, JK. And just quickly summarizing, the PPI number, which showed some big increase last month, and also services side inflation has remained on the higher side. But what comforted the markets was the March numbers, which were revised lower, and also a comforting statement by Powell who reiterated that rate hikes are not on the cards. Attention will be on the US CPI today and the retail sales. A moderation is expected from the retail sales number. For rupee, we remained in a very one of the lowest ranges of 1.25 paise, as JK mentioned, it was dominated by PSU banks on both the sides. So we'll keep tracking how that evolves. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.